What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Larry Jones. How are you doing today, Larry?
Good, Dan. How are you?
I'm fantastic, and I'm not sure if you're aware of this or not. That I got some really great news for you. Today, we are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a Chance Encounter where I interview commercial real estate players. That means deal sponsors, passive investors, buyers, sellers, all that kind of stuff. And you might ask yourself, why are you doing that? And the answer is, if you know about off-market deals, these are the private deals that you're not allowed to publicly discuss, then you should know that the SEC requires that you have documentation of your prior substantive relationship, or else the SEC will get ants in their pants and they might take away your business in the form of rescission. That's bad. So I have people on here to talk about what's your buy box, what exactly are you looking for, what roles of the team are still open, or who are you looking for, and that sort of stuff. But before we get too excited about real estate, Larry, do you want to introduce yourself to the audience a little bit?
Yes, sir. My name is Larry Jones, located in New Jersey. I'm the managing partner at Tri-State 7 and founder of ClearCap Solutions, where we specialize in investor relations and just providing limited partners a great opportunity to receive double-digit returns.
All right. I love it. I love it. So that brings me to the first segment here, which is the 5 distinct motivations. Before I do that, I don't know how technologically inclined you are, Larry, but I got to say, but wait, check your 8. To do that, I don't know if you can pull this out or not, but if you can look into the camera and down into the user's device down there, they might have this big, hideous subscribe button, and it's unsightly and it's embarrassing. They should probably do something. Okay, it's a stupid joke, but whatever. Anyway, let's talk about the distinct motivations. I've now interviewed hundreds of different investors and deal sponsors, syndicators, all that kind of stuff, and everybody has their own unique reason why they're doing these commercial real estate deals. But at the end of the day, I found they fit pretty neatly into these 5 different categories, and it's important to know what people's motivations are because, after all, there are plenty of risks involved, and sometimes it gets tempting to throw in the towel. So if you know what's keeping them in the deal, then that helps you have a little bit more confidence in what's going on. The first distinct motivation is preservation of purchasing power. What on earth is that? Well, there are some people, they already have a lump sum. Maybe they're retirees or something like that. Maybe it's from their family in the first place, or maybe they were big earners in the past, or maybe they're big earners still. Maybe they're physicians or engineers or attorneys or something like that. And the reason why people in that situation will make another acquisition is because they need to preserve the purchasing power of their extra capital. Now, of course, the things that make these guys a little bit different from others, you might say, hey, well, if you already are financially that well off, why are you going through the hassle of another acquisition? And generally, there are a few different situations. One is if inflation's rearing its ugly head, then that could eat away from the purchasing power of your nest egg. And then the other thing, which makes them a little bit different, is they're only going to act when they get the steepest discount possible. Maybe that's because there's an asset crash or something like that. But the fact is, people in this situation, they're not going to make a deal just for deal's sakes. They're going to actually be a little bit more careful. And full disclosure, I'm not to that point in my commercial real estate journey yet. What describes me better is trading time directly for wealth. Now, I've got a background in technology, which means high wage, high income, high salary earner, and all that sort of stuff. And of course, as that happened, I noticed that my tax bill was going up, up, up. You know, a bigger portion of my salary was going towards income tax. And I started working for a guy in real estate back in 2014, so over 10 years ago. And I saw how his tax burden was better off. And basically, I saw that he was getting rewarded in the form of deployed capital, aka equity. And so that made me go, hey, I think I'm on the wrong side of the right business. And so I ended up making that switch around 2020, around that neck of the woods. So that's what I'm doing. And I get that that's a little bit too subtle for some people, especially youngsters. What tends to resonate with them a little bit more is they're trying to fast track retirement, or maybe they're just trying to take control of their schedule. Basically, they want to be able to choose when they work and when they don't. And of course, one thing to look out for, some people will think that they think that everybody's trying to actually fast track their retirement, but I assure you that's simply not the case. Some people are fueled more by ambition, like these guys here who want to buy their entire hometown. They want to have their name in lights. They want to have the biggest yacht in the pier, all that kind of stuff. And I get that sometimes in some circles that's rather vilified, but I think that when you're talking about commercial properties, you have to have some people who are not going to be asleep at the wheel. They have some sort of motivation that's not going to run out. And so having these highly ambitious people, it's very important. And the residents, the people who lease or rent the property, they're going to be thankful that there's somebody who's really active and taking care of the place. So they're not going to quit. They're going to hustle into their 90s, just like this last group that I have, where rather than their own generational wealth or making sure that their great-grandchildren never have to hold a day job, some people have picked a sector of society, or maybe it's animals or the environment or something like that, and they found out that there's a financial component to making a big impact, and so that's why they are building their wealth with commercial real estate or these different investments. So Larry, these 5 different motivations, what combination of them would you say describes you best?
Man, I think I'll hit a couple different ones, to be honest. Started off with just providing a safe, secure lifestyle for my daughter, just giving her the opportunities I wasn't presented when I was a kid growing up. So just giving her a better lifestyle, and also being an asset to my community. Just being there to add value if they need it. Educate them on different investment opportunities and just have their money work for them. So from my previous W-2, I kind of saw them work until late years of retirement and just like counting down the days, trying to figure out what the best day for them to retire. And I'm just thinking they could be spending that time with their family. So I want to add value to them that way. Also, I'm not scared of the spotlight. So I also want to have my name out there, be known, and like I said, add value to those around me.
I love that answer. Now, of course, that's talking about the motivation, but of course, when you're talking about motivation, there's a little bit of a risk of seeming a little bit starry eyes, optimistic, maybe even a little bit naive. And so I taper that a little bit with this question right here, the tolerance for risk assessment. Now, the source of this slide was because when I got involved in a 506B deal in the past, one of the things that the securities attorney, who really should have been involved in whatever 506B deal you're doing, they should have insisted that you fill out this highly invasive financial questionnaire called a suitability questionnaire. Sometimes they have different names for it, but it's asking you a question about like what's your net worth, what's your income, what kind of investment history do you have. But the one question that I took issue with in that questionnaire was the tolerance for risk assessment question, because I felt that it lacked utility. It didn't matter which of the multiple choice responses you chose. I didn't feel like you really know the person's tolerance for risk. So here I made my own question. It's a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. So Larry, it can be inside real estate, outside real estate, or both, whatever you want. What's too risky for you to invest in?
I think currently too risky, but could be also rewarding, is the stock and crypto market. It seems like it's very volatile. It seems like a tweet can really throw things off, but in the long run, it does have a proven system. But currently, I think the stock and crypto is very volatile compared to the real estate.
I love that. With crypto, at the end of the day, it's an appreciation move. So it's buy low, sell high, or you just play and lose. And then with stock markets, I'm not crazy about the fact that they've all got PR departments, which like their entire job is to, spin the truth into some version that's more palatable. And when you're involved in real estate deals, you have direct access to the people who are running the show. So I'm definitely there with you. But that brings me to the next slide. This one, I thought it was a little bit of a fastball question originally. So for the first 100 or so chance encounters, I didn't include this one. But the reason is because I knew some people are more front of house, they're marketing, some sort of public relations. And so I was concerned they're not really the people who really dig into a spreadsheet. And so I thought, well, I don't want to out them in that sense. But at the end of the day, we're all curators of deals. And so there has to be some sort of way that people say, okay, well, this seems to be a good deal and that one seems to be a kind of ho-hum. And the metrics tend to be the way to do that. So that's why I started going through it. Now, for anybody in the audience who's only listening and not watching, I'll read out. I've got 14 of these, I believe. And it's not an exhaustive list, but hopefully we'll find maybe a top 3 or something like that. The metrics I have here are cash on cash, IRR, which is internal rate of return, also known as an equity multiple. There's the cost per door. There's the net operating income of the property. There's the going in cap rate, which is actually to show what sort of discount you're getting compared to similar commercial properties in the area. That's widely published what the standard cap rate is in any area. And so that's an easy way on the back of the envelope to see what kind of discount you're getting. The next one is the loan interest rate, which is especially important if you're going to be assuming a loan. There's the occupancy rate, which is the inverse of the vacancy rate. It's just how many of the units are actually filled. So both of those numbers are the same thing, just inverted. The next one is average income where the property is located. Then there's the amortization period of the loan, which is especially important if you're going to be assuming a loan. Then there's the difference between the market versus the in-place rents. In other words, are they undercharging right now, and is there opportunity to upgrade the property and raise rents? Then there's the population growth where the property is located. That has some baked-in appreciation right there in the form of demand. Then there's the sponsor record, which is how many deals have already gone full cycle, how many deals are on the go right now. And then there's the waterfall split or exit strategy, which is basically what happens to your investment after your capital has been returned. Like if there's a cash out refinance, or are they planning to sell early, or is it buy and hold, or what is it? And then the last one I have here is DSCR, which is debt service coverage ratio, which is basically how much of the revenue is going out the door immediately just to pay for the loan. Now, once again, it's not an exhaustive list. So Larry, if you have any metrics that you prefer that aren't on the list, go ahead and add those. But which ones do you depend on most?
Currently, I depend on cash on cash. I would like to see strong cash flow in a property, especially around a lower occupancy of 90%, 95% around there. If it's cash at 100%, there might be some times throughout the market where you're seeing higher that might affect that number. But if it's able to cash flow around 95%, I think that'll be a good metric to provide a better understanding for the investors.
I love it. I love it. I'm just gobbling up that answer like a delicious subscribe sandwich. That's a trip, isn't it? That's my little cue that it's time to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And the idea being is if I go through all 6 sides in every episode, then you know how my guest fits into these deals. And if you're looking at me go through these different sides of the cube and thinking, wow, I really need to get me one of those. Well, the good news is it's absolutely free. You just go to dandoesdeals.com and there's this big conspicuous button you can click on and it goes straight to the PDF. You can print it out, fold it out, and you have one to play with, try with your friends and family and all that kind of fun stuff. And yes, you heard me right. I don't even ask for your email address. That's the cardinal sin of marketing. You should always ask for some sort of contact information in return for your freebie, but I like you, so that's why I want to offer to you for free. Anyway, let's get started. The first role on the Core Competency Cube is the repositioner. They are the most publicly facing people in the deal. They're looking at a bunch of different properties. They're doing a bunch of different paperwork. And why do they call them repositioners? It's because they have to figure out a way to change how the property is run to find more upside. Now, of course, first of all, they need to underwrite the deal. They need to do the math. They need to do the arithmetic to find out, hey, is this property even making the amount of money that the seller or broker claims it is? Because So the repositioner definitely has to have a pretty firm grip on that. Now, one thing that's kind of, I don't know, unintuitive about repositioners, you might ask yourself, why do they have such a wide circle of financiers? Why are they always rubbing elbows with people who only deal with the capital itself, the owners of the property, and the paperwork? And the answer is, this is a highly capital intensive industry, so you have to have different investors, different lenders, different banks, and all that sort of stuff. And if you can secure a cheaper loan, that goes straight to the profitability of the building. So that's why all the repositioners have to know lots of financiers. There's a certain component of financier relations or investor relations inside being in commercial real estate. So even operators in general, they'll also have those sorts of relationships, and that's the reason why. But the next place that the repositioner will frequently look is they'll take a look at operations and say, hey, why are all these Benjamins going down the toilet here? But of course, there's more to operations than just unclogging toilets and collecting rent and all that sort of fun stuff. Me personally, when I'm on a GP team, I use my technical acumen and also my marketing chops to help the GP team out. And if you understand that occupancy, or more accurately vacancy, is the enemy and the deal killer, then even if you are looking at bigger properties like I've done historically, then you need to have somebody on the GP team with some serious marketing chops, because even if the property manager, if they just can't fill those units, you need somebody with those marketing chops to step in and get those units filled. So that's where I throw my hat in the ring in that sort of situation. But there's only so much you can do with operations. After all, apartment complexes, it's a competitive industry. So the next place the repositioner will frequently check is they will get a contractor team involved to do a value add or do renovations. If you basically make the place nicer, then the future residents are more likely to be willing to pay more in rent than the previous ones, and so therefore you've discovered some upside. But if only things were actually that simple. The fact is, you have to keep tabs on your contractors, make sure they're not using subpar parts, make sure they're not dragging their heels on getting the projects done. And so if you're like me, I don't know if you know this about me or not, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because I'd still be stuck at an airport in an hour or two. So that's not going to be me. I need to have those boots on the ground who can keep an eye on the contractors, make sure that they're not sloughing photos and all that kind of stuff. And same with the third party property managers, the operations. And that's the role of a local. But to explain the sixth and final piece of the cube, I like to use a hypothetical. Let's say you're a physician or an engineer or an attorney or something like that. Maybe you have a few single family homes that you rent out, or Airbnbs or something like that. And you get this idea in your head saying, hey, maybe if I turn around to my colleagues at the hospital or wherever you work, and you say, well, hey, I know how to buy a rental. You know, you get your down payment and you borrow the rest. If my friends and I pool like $100K each or something like that, I bet we could take over that 350 unit apartment complex down the street. So full of confidence, you turn around to the financiers, the banks, and say, I want to buy that huge building over there. It's tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend us, do you? Well, the financier is going to tell you to hold your horses for a second, because they're going to have another question for you. And if you're taking a coaching program or something like that, I encourage you to listen very carefully to this next part. They're going to ask you, who's your sponsor? Who's your KP? Now, what's that all about? If you're going to be eligible for a commercial loan, you basically have to be able to prove that you're not just going to take all of the depositor's capital in the form of a loan, buy the property, and then run it into the ground because you don't know what you're doing. So somebody in the fold has to not only own a similar property, in other words, if you're going to take over a 350 unit apartment complex, somebody in the fold has to already own a 350 unit apartment complex, but there's also a net worth component for collateral. So between the GP team, you need to sign on the loan and have enough to put up that's at least equal to the amount of the loan. On top of that, you need to be able to prove that you've got enough capital to actually run the business. But if you got all those pieces, you got yourself a commercial real estate deal. So Larry, as far as those different roles, I'm confident that you're going to have some sort of repositioner and asset management roles, but where do you see yourself fitting in your next deal?
I specialize in investor relations, so just going through the deal sourcing property process, finding the best opportunity for them to invest their money. Like I said, I'm the managing partner of Tri-State 7, so we do have three underwriters who have a good idea of the market and understand these properties inside and out based on the numbers. Also have a general contractor and David Simon, who's the owner of Bless His Home, and he has all the insights on how to do things, the pricing of the rehabs of the properties, things like that. And we are also working with a sponsor who has the proven track record of successful partnerships and things like that.
I love it. So that brings us to the buy box itself. When real estate people are saying, hey, what you looking for? What's your buy box? We're asking for three things. First one's geography. Where is it? Which state, which county, possibly even which neighborhood. It's definitely going to matter. Second one's going to be size. The reason why you need to know the size is because the type of investor who tends to focus on 5 or 10 or 15 unit apartment complexes, they're going to be fundamentally different from the ones that are looking at 250 unit apartment complexes. So that size is going to matter. Now, of course, not all types of commercial real estate are multifamily or residential, so they might not go by the unit count or door count. They might go by square footage, but that concern about size is still going to apply. But the third one is commonly called class. I like to call it desirability because it's more than one part to desirability. One is the location, and then the other one is the condition. If I'm talking about the condition, we're talking about how old is the property or the facility, how beat up is the facility, in other words, has it been recently renovated, and then of course what sort of luxuries and amenities do they have that are available to the residents, like, is there a swimming pool and all that sort of stuff. That's obviously the desirability, but it's also wrapped up into the condition. But if you're talking about the location, everybody knows that old broker trope of location, location, location. What they really mean is traffic, 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 because if more people are going by that property every single day, you've got more baked in desirability. But the crime rate where the property is located is always going to matter. And if we're talking multifamily like we generally do on this show, the school districts where the property is located is also going to matter. But both the location and the condition are ranked the same way as in grade school, where you've got A plus at the top, and then A, and then A minus, and then B plus, and so on. So Larry, as far as you guys go, what's the buy box?
Our buy box, pretty much in emerging markets. So currently our focus is Columbus, Ohio. We like to find value add opportunities in BC properties. We like the property to be a little after the 1980s. We like to stay away from certain things of aluminum wiring and certain kind of plumbing to kind of prevent any kind of hassle when we're going to add the value to these properties. And to touch on your point with the colleges and the economic growth, we're seeing tons of growth in Columbus, Ohio. It's going to be a tech hub of the future. We have Amazon warehouse going there, Honda Battery, Arsenal One with mechanisms and things like that. And also has Ohio State University there, 60,000 students in the area, so plenty of rental demand.
Yeah, wow, that's quite the size of a college there. So the next question then is talking about people, and honestly, it's my favorite part of this industry. I think it's because it's a multifaceted job or industry. There are these different roles here, so people tend to be really eager to give referrals, help build more teams, because in the long term, everybody ends up winning. But at the same time, it's a very capital intensive business, so of course everybody is interested in speaking to more financiers. If you're looking for investing in this industry, then it's important to reach out and get connected. But me personally, the other person that I tend to focus on are sponsors and KPs, and that's because of my technical acumen. Basically, I can help people who have already built a business already a lot more than I can help startups where you're wearing a million different hats, juggling a bunch of different balls, and putting in like 80 hours a week or something like that. That's just not where I'm making the biggest difference, so that's not really me. But Larry, as far as who's out there in the audience, who are you best suited to help?
I want to help people who want to have time freedom, location freedom, have their money work for them. Just give them their time back. Like I said, I see people working long years, well past their retirement time, and just trying to make the last penny work for them. Instead of that, I want them to, make their money time with their family or even help like a busy high income professional who doesn't have the time or education to acquire this real estate. Like I said, my team Tri-State and Seven and I are looking to acquire large multifamily properties, and I think this is the best opportunity.
Perfect. And so I'm sure everybody's thinking how to reach out. I'm going to sandbag that for a second, talk about myself. LinkedIn is the social media platform where I spend most of my time. So if you're going to connect with me, that's going to be the best way to do it. The best way that I can help you more likely than not is to have you on as my guest, either on this show, Chance Encounters is featured on dandoesdeals.com, or maybe we can play a game of chess on chesswithinvestors.com. If you're wondering though what this QR code is, that's the Amazon.com QR code, the author page, where I have books like Real Estate is a Scam. That one is about the different myths that a lot of coaches will end up telling you is the way to do real estate, and then you can wind up in a fair bit of trouble if you follow their directions to the letter. But that's the easiest way to get a hold of me. Direct message me through LinkedIn. Larry, if people want to reach out to you, what are the best ways?
I'm active on Facebook and LinkedIn as well, Larry Jones III. I can also be reached by email, jones.larry1521@gmail.com. Also have a website, ClearCap Solution. Feel free to reach out, connect with me. I'd love to hear your story. I love meeting people in person, so Zoom is the best place to contact me. Just love to touch base and connect with you guys.
Beautiful. And that brings me to my public service announcement. It's not so much for you, Larry, as it is for you in the audience. If you've been watching this episode and experiencing searing pains in your eyeballs, maybe like migraine-like symptoms, I'm confident it's due to the downright hideous subscribe button that's down there that you probably forgot to hit. I know it is, but it's free. It doesn't cost you anything. You just hit the button and you're good. I'm biased. I want a bunch of people to click on it because I want those deadbeats at YouTube to start paying for these videos instead of me. I think that would be amazing. And the trade-off to you is my videos may show up on your list of suggestions. Quite frankly, you can go ahead and ignore those suggestions though, because I just appreciate the fact that you spent this time with me. Just like Larry, appreciate you joining me. This has been great.
Yeah, thank you, Dan. I've been looking forward to connect with you, man. It's always awesome talking to you on networking calls and hearing about your background and things like that. So I appreciate you for having me on.
My pleasure. Awesome. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a Chance Encounter interview as featured on dandoesdeals.com. You may know me from 506 BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute Chance Encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot.